go back to your fundamentals, make it to be different from others. That when they need you, when they remember you. And I know that I'm very good at teaching kids how to read. Right? And I've been doing it, but I stopped one time. And somebody wants to, you have a platform where you teach us how to make our children to read at the tender age, which I stopped. I went back to my fundamental, just like what she said, my skills. And I told myself, I said, I'm going to change my DP to, if your child cannot read as from age 4 or 5, Irish is the solution. You see, she has inspired me, and I had to go back and I just ask myself, what are those things that others are not actually doing that I want to do? So when we come here and listen to testimonies, we are trying to tell ourselves, I can do it, if he can do it. So who is going to bear the card this morning? I want us to listen to your testimony of what you have learned, how this meeting has been transforming your life and is still transforming. Thank you very much. Please put your hands together for her. For it. Thank you, sir.
Good morning. Good morning, generous juniors. This is June. This is my 5th time of being here. I joined this Great Academy in February. Now I've had so many positive experience, from attending. But something happened in the last meeting, Mrs. Caxton-Martins, right? So it wasn't even what she thought. It was like a side. She was answering a question that someone asked. So this is like a pre-testimony, because I was going to come back after a year to actually share a couple of testimony. But she made mention of something last month that I've started, then I had to open something online, the calculator app. She said something about saving 350 naira per day for 40 years, it's something. And I was like, is that really true? So I sat down and then I did the mathematics myself. I'm in my early 30s, 30 years from now, I should be in my early 60s. I have a young daughter. I was like, okay, 350 naira per day, and things like, okay, maybe you want to buy Coke, you buy it. You want to, now I thought about how to, not even do anything extraordinary. I do myself. I browse, I go on LinkedIn, I go on Twitter. I do myself, that even propelled me to go into calculating how much I spend every day as per data. So since that time, I've stopped going to Twitter. Because I told myself, what am I even doing on Twitter? It's just fun, right? I've reduced the amount of I spent on data by half. So that's half money of using it for. I save it completely first. So now, yesterday, I was able to open Stanbic IBTC, the mutual fund app. So now, I've seen that this thing is actually doable. It's possible. And it's not even the main topic of last month. It was like somebody asked a question, and she made mention of that just by the side there. I caught that. So I told myself, even if it's like I'm saving it for my daughter or for the ones that will come after her, 30 years from now, doing the little things can actually do a lot of things. So it's actually a great testimony. I will still come back after a year to show that I've done it. Thank you, man.
Thank you very much. Put your hands together for him. We can do better. Please let's encourage him. That is for him. And for our speaker, for answering that question that motivated, please put your hands together for her too. So, thank you very much. Another speaker? Put your hands together for him.
Good morning, sir. I'm Engineer Yohande Anthony. The testimony of something to encourage and inspire. That's why I'm here with my 2 children. Brad, good morning. That's one of the whom they need. I've been in the Huntington Academy for so long. I'm a retired civil servant. And some things I got from the Huntington Academy, there are things that I should have known even while I was in secondary school, while I was in college. And that is why I'm here with my 2 children to learn 1 or 2 things so that I can help them in life. I cannot mention too many things I get from everything. One of it is the power of vision board. I have a vision board. I have affirmations. And most of our affirmations come to pass. I remember when I wanted to get to a post in civil service. I've had that in my affirmation. I am so. And there were opposition, there were things, but I got them. And I know it because I've been affirming this thing for so long. So, and there are so many other things that Dr. Abibola Tutoye has taught us in this academy. Now, sometimes I want to take a decision and say, Dr. Abibola Tutoye take this kind of decision, and that has helped me a lot, when it comes to money, because he's very passionate about the issue of money and savings. So as he has said, he's very passionate about it. So there's so many things. I'm just a testimony, also to encourage people. I'll never forget the academy. If I'm not here, my spirit is here. I've gained so much, since 2005, something started here. So thank you very much.
Put your hands together for him. Can you see? After influencing him, he decided even to bring his sons to come and learn. So we are here to learn and to unlearn and to relearn. So, another person, put your hands together for him. Thank
Good
you.
morning. The affirmation that we do, please let's continue to do it. One day, we were told about tipping point. Remember, tipping point has not been taught in the same time, but I remember that tipping point is a particular time that you strike that tree and it will fall. You have been cutting, don't lose hope. So I did not lose hope over time. And I kept on. I started with the experiments on perfumes. People were not buying perfumes. They preferred to buy branded, customized. I produce better than that. I can compound things that you love, fruits that you love into your perfume. There was one day I was just doing a balm in my kitchen and discovered that the dead rats, there were a lot of houseflies that left that room. I now studied my ingredients, what I was doing. That's that they had insecticidal. I now decided to include it in my diffuser. I started the diffuser right there. And I cannot meet up the demand now. The thing is a premium product. It's 9,000 to around 15,000. People have testified that since the day they brought the same thing to their room, they never saw any mosquito, house flies, cockroaches again. Instead of buying these hazardous fleets that's 3,500 per time, by the time you use it for 6 weeks, you'll be able to know the value in it. I want to thank the authorities of the Undertake Academy for what he had done. Please continue. There will be a tipping point for you. Thank you very much.
Thank you, sir. Let's give him a round of applause. Thank you, sir. For always want to say one thing or the other. We appreciate you because we are learning and we have put all our thoughts in practice. So I'll quickly do a short charge, as I'll call it, before we bring up our main speaker for the day. So what I want to talk about is not something that is not new. It is something that we do every day. As a matter of fact, it has been mentioned during the testimony session. I title it The Power of Repetition. And quickly, the dictionary defines power of repetition as the action of repeating something that has already been said or written. It's also defined as the reoccurrence of an action or an event. Power of repetition. There's this authority of a figure too that also define repetition, and I'd like to give it to us. It says, repetition is the mother of learning, the father of action, which makes it the architect of accomplishment. That's Zig Ziglar. Repetition is the mother of learning. That means when we repeat things over and over, we are gaining momentum. the father of action. It spurs us to take action. When you repeat things over and over and over, you gain mastery over it. And it's also the architect of accomplishment. It helps us to accomplish things in our lives, in our day-to-day activities. When how many of us here we brush our teeth before coming? Everybody. You know, that's action of repetition. We repeat it over and over again, and we have mastered it. Where I want to believe some of us, if not all of us, we drove our cars in here today. Am I correct? We drove in here today. And do you know that some of us, when we drive home from work, and then maybe you have one of your friends in the car and you guys are gisting away, do you realize that you don't have to be looking, have I gotten to my street before you turn in? Do you realize? Because you have repeated that journey over and over again, and you have become a master. Even if something is troubling your mind while driving, the moment you get to your junction, what do? You turn. So power of repetition is very, very important. You pick a thing, you want to change an habit, the reverse of that habit, begin to do it every day and begin to repeat it. Before you know it, you just discover that I'm no longer doing those bad habits. And you have picked up the good habit. Power of repetition, very important. How many of us, you ride bicycle? I still remember my own experience. You know how to ride bicycle. When they were teaching me, I wanted to say when they were teaching me, when they were teaching me how to ride bicycle, I remembered I fell into a cooked beans. I mean, fresh cooked beans. I fell into it while I was learning how to ride bicycle. Yes, now you know, you try to press the pedal, and the guy just left me. I was now going. I did not know what to do again. I fell inside the cooked beans. Of course, I got my skin burnt and all of that. You know, but afterwards, I went back to it, and the guy taught me, say, you press it like this, you repeat the pressing. Before I knew it, I was, gliding everywhere. So very, very important as we go through our day-to-day activities, as we come here, we learn, and we pick those things and begin to repeat it. Do you know that affirmation is power of repetition? Yes, you repeat it over and over, and before you know it, that action begins to manifest in our lives. So, without wasting much of our time, because we don't have time, I hope I've been able to drop something important. Have I? Yes. Thank you. Can I get a round of applause? Okay, so once again, I'd like us to put our phones on silence. If you are just coming in, please put your phone on silence. If you have not done that before, please do. And I have the privilege of bringing up stage someone that some people don't know, and some people already know her. This morning, Mrs. Olajumoke Caxton-Martins is a lawyer, a Nigerian Bar Association, Women's Forum mentor, and a business management consultant. She holds a master's degree in international trade and investment law and certificate in philanthropy and business skills competency. She's an associate of trainer in the Nigerian Institute of Training and Development, and a professional mentor and coach with Chartered Institute of Mentoring and Coaching Nigeria. She teaches life application skills through our training outfit, Life Mastery Academy, and a video blog on YouTube. She's a motivational speaker, and she runs a productivity coaching program for women. She is also a published author, and she delights in coaching intending writers from conception to publication. She presently serves as the Group Managing Director of Academy Suites, Hotels, Ibadan Central Hospitals, Tolu Medical Centers, Lagos, and the Abib Olamitoye Foundation. I would like us with 110 Academy clap innovation to welcome upstage Mrs. Olajumoke Caxton-Martins, as she takes us on today's seminar. Thank you.
Thank you very much. It's okay. It's fine. It's okay. Please, let's sit down. Yes, sir. Thank you so much. I'm happy to be here this morning. I'm happy to see all our faces. Can the screen be brighter? We might need to. Would it affect our streaming? Please, let's check and see. If it won't, maybe I'll now have to come and stand under the lights. Yes, this is a bit better. But let's see if those joining us online can still see as well. Of course, the same way we always start, let everybody move forward. If there are empty seats in front of you, in the row in front of you, no matter whether it is on the other side of the row, please occupy the empty seat in front of you. Thank you. Let's all move forward so that the people coming in would not distract us. Thank you. Thank you very much. Are we together? Because I see you trying to beg it to go to the first page. So I was really glad, and this is why it's good to come early. I was really glad when I heard his testimony about the last session we had together in May. And the beautiful thing is that the testimony he shared is the basis of today's seminar. And so listening to his testimony alone is enough motivation for us. You know, as a matter of fact, we can just go, he has told us what we need to do. That's what we've come to talk about. But you know that we always say that the rule for investment is that you must investigate before you invest. And it is important that every single person does not put money in something they do not know or that they do not understand. And so today, we are dedicating our discussion to understanding the money market, how it works, and how we can make profit from it. So today, we are talking about the money market. We are sharing tips on the money market. And we are talking of how to develop the skill of saving and how to profit from trading in the money market. Wealth creation has 3 pillars. You cannot ignore one of those pillars and be wealthy. And those 3 pillars are the pillars of earning money, the pillars of saving money, and the pillar of multiplying money. And the way to multiply money is to invest it. Mrs. Oluwole, I'm happy to see you, but I don't like the fact that I'm not seeing you enough. Please move closer. You are feeling far away from me, and you know I need your vibes to deliver appropriately. Yes, ma'am. You want to shake this? Okay. Okay. So we are going to look at all the pillars. You see now is working. We are going to look at all the pillars of wealth creation. Well, especially the last pillar, which is how to invest in the money market and why the money market is what we are putting forward to you today. Sorry, my media team is giving me direction this morning. Yes, so going on quickly, Earning is not enough. As a matter of fact, many of us have been lured into the trap of earning and needing to continue earning in the same way. This is why people who earn salaries find it difficult to venture out or start a business. This is also the same reason why we'll see many people queuing up in front of pension board, queuing up to collect gratuity, because they are used to living from paycheck to paycheck. They are used to basing their calculations on what comes in. Now, the only way to avoid living from paycheck to paycheck is saving something, keeping something out of everything you earn. We say it at the 110 Academy. We recommend books to be read. There's Love Yourself, Pay Yourself First. We have always advocated that we should read Richest Man in Babylon and all these other books that talk of how to create a life of wealth for yourself. And one thing they will tell you is that what makes you wealthy, what makes you comfortable, what grants you financial freedom is not how much money you make, is how much money you can keep out of what you make, and how you can make the money you keep give birth to more money on your behalf. Unfortunately, life happens. And from time to time, we come across challenges that make it seem like the money we have is not even enough for us to live on, not to now talk of keeping something for the future. However, it is more or less a fact of life that money will never be enough. And so, if it is never going to be enough anyway, we might as well just keep, so that tomorrow will be more comfortable than today, since it is that same fact we would have to live with for a long time. So many people get trapped in living from hand to mouth because they continue to build their future on what they earn, or rather build their living on what they earn without thinking of the future. Now, another thing that happens is that Parkinson's law comes to play. Who knows Parkinson's law? We're students, so it's an academy. Who knows Parkinson's law and how it operates in the lives of people that earn money? Yes, sir.
Our expenditure will always grow up to meet up with our income.
Yes, sir. I've not put it on. Yes, sir.
Our expenditure will always grow up to meet up with our income.
Yes, sir. Thank you very much. Parkinson's law states that whatever income you have, your needs will grow to match it. I'm sure if you have ever had a salary increase before, you were fine when you were earning 100,000. Everything was well. You were managing. But the day they increase your income to 200, it's the same problems you had when you were earning 100,000 that you will still have. Why? Because suddenly the things that were luxuries when you were earning 100,000, you suddenly change their name from want to need. You adjust your thinking such that those things you could do without, you now begin to see them as necessary for life. And then they take up the extra money. And the truth is, it does not matter how much the increase is. Many of us feel like if our income is increased by times 10, that won't happen. It's not true. If the income is increased by times 10, your perception of your status in life will increase by times 12. And so automatically, that money will be mopped up by what you think your new status is. I mean, I cannot be earning this much and I will not be able to afford extra clothes. There was nothing wrong with the clothes you were wearing before. You know, and then you'll be passing by and you will hear and you say, it's just 350,000. How can I be earning 1 million and not be able to buy something else? You know, so that argument you begin to have with yourself in your head is what mops up your extra cash. Once you have mopped up your extra cash, whether you like it or not, every time you earn, you'll be waiting for the next salary or the next income. It happens to entrepreneurs as well. And so we get lured into the habits of living from paycheck to paycheck. Those in paid employment wake up to harsh reality one day when they lose that job they have. And the harsh reality is, I've worked for so long. How long can I live without working? And then you suddenly realize that what you have does not cover what you need. And one of the fears that comes is, I must not lose this job. Because if you take an assessment of yourself today, you realize that you might not be able to maintain your lifestyle for at least 3 months if you stop working today. And that's why it's extremely important for all of us to keep the future in mind. The same way the person that designed the car put a spare tire and jack. Not that he does not have faith in his creation, but he also knows that he cannot determine the person that will put a nail on the road or determine who will put a rock on the road that will cause a flat tire. But what if there's a flat tire? There has to be a plan for a spare that will help you until you can replace. And that's why we also talk about emergency funds. But emergency funds are quite different from life savings. Life savings is what will give you the future you desire. And that is the savings that you have that you do not touch. Even though our testifier this morning did not go to town on the details, the truth is that table he saw that made him go to open a mutual funds account was a table that showed him that if he leaves that money he's saving without using it for emergencies, without using it for projects, he'll be able to get a much better, brighter future than what he can see today. Now, today we are going to be looking at some other tables that are even more fantastic than the one he saw, so that there will be nobody left that will not go and open a mutual fund account. We don't prepare for battle in the day of war, do we? By the time the war has started, it's already too late to prepare. The war has started, you need to start fighting. And that's why we don't prepare for opportunities that will come when the opportunities have come. We prepare for opportunities that will come before the opportunities come, because opportunities pass. They don't come and sit down inside your bedroom. They are passing by. The way you will grab onto them is if you have savings. For those who have tried to apply for bank loans before, have you ever heard of something called equity contribution? Okay, I guess many of us have not applied for bank loans before. If you go to a bank and you say you need money to execute a project or to purchase some goods, they would say that you must make an equity contribution to that project you want to do. No bank will lend you 100% of the money you need for what you want to do. As a matter of fact, it is a standard principle that you must have at least 30% of the money you want to use. Now, if you don't have that 30%, the bank will not treat your request. So the fact that they're asking for collateral, they're asking for repayment plan, they're telling you to issue deposited checks, is because they have seen a measure of readiness to even execute that project in you. What is this measure of readiness? The money you gathered by yourself that you want to use for the project. Nobody will support you if you are not supporting yourself. However, if you have not put anything aside, if you don't have any savings, if you don't have any money you can raise to do the business by yourself, then how then do you avail yourself of the opportunity? Even when you want to ask people for help, they must see that you are helping yourself. And that's what led to the saying that heaven helps those who help themselves. So the very first thing is that you must help yourself. How do you help yourself? By setting something aside for the opportunities that will come your way. You are passing by somewhere, you see a problem that the person that solves that problem now will cash out. You are ready to solve the problem, but you don't have the money you can use to execute what the problem is. Gateway games, people came. They didn't have a place to eat in the stadium. You want to supply food to the stadium. The raw materials you're going to use to cook, to carry food there. If you don't have money to buy it, what is going to happen? You will miss opportunities if you don't have savings to avail yourself of those opportunities. So this savings thing, nobody is going anywhere without having savings. Life will happen, it's your savings that will help you. Opportunities will come to live where you are and become a bigger, better person. It's your savings that will help you. The things you are looking for in life, if you at least have some savings, you can now add knowledge to your savings and climb the ladders of success that you want to climb. However, saving is never for the purpose of saving. Who knows how much your savings account will give you in terms of returns? Sir? Less than 1%. Per annum, yes. You are using OPay. OPay is not a normal savings account. They are giving you investment interest on your savings. The traditional savings account in a commercial bank will not give you anything higher than 6%. And you will forfeit that 6% if you withdraw more than 4 times in a month. Do you understand? So the minute you have withdrawn, it doesn't matter the amount. Oh. You can have 25 million and be withdrawing 1,000. If you withdraw 1,000 4 times, you cannot get that interest again. Do you understand? So it doesn't, as far as you are withdrawing, it just shows that you have not imbibed the culture of saving. You are spending your savings, so they don't give you interest on your savings, and they will not give you more than 6%. There are special savings accounts that can give you as high as 9, 10. However, what OPay is doing, they are paying you interest on actual savings. But you know, many people, that's how they can attract you, because bank that does not have building, that does not have office, you are a bit wary to leave your money there. The only way they can make you leave your money there is to offer you those kind of high interests. So that's why they do that. And so when you save, you must know what type of basket you are putting your eggs in. The savings account you have that is giving you 6%. Please, who knows how much mutual funds is? 20, 21, it fluctuates. But at least this year, it has not been less than 20. So why would I leave my savings in my savings account of 6% that if I pass 4 times, I will cancel the 6%, when it can be somewhere where it can earn as high as 20? So the purpose of saving is to pool the funds to push into a place where you can make more money from it. And that's why when we talk about wealth, we say it is not about how much you earn. It's about how you can make the money you earn work to give birth to more money for you. At 20% per annum, in 5 years, you will have your full amount back. 20 times 5 is 100 now. So in 5 years, you will have 100%. So without working, you continue to work and make money. Your money is making more money. At least 1/5 of its size every year. And if you continue to work, that means you can continue to increase the amount of money that is giving birth to more money. So the purpose of saving is not just to watch your savings. Don't even save under your pillow, because you do not know if you have not used the things that Mr. Odufa is sharing. You might have things in your house that will eat the savings under your pillow. If you hide it in the floor, if fire burn, money have gone. You know it's paper. It used to burn very fast. If you take it to the bank, you are saving it, but it's not increasing. And then inflation will now come and do its own. So the power of that money last year is reduced because you are putting it in a place where it is not growing. And so it begins to lose value because you are keeping it in a place where you cannot monitor its growth. So it's important for us to always pay attention to monitor the growth of our money. So wealth creation is not about how much you earn. I've already explained why the people who earn a lot will still grow broke because of Parkinson's law. Their wants will grow to match the money they have. That's why personally, I don't put money in my bag or in my purse, because if I have put it inside and I have gone out with it, it's difficult to come back with it. Yogurt will do like this on the road, you know. Somebody will now be stranded. Auntie, you know, I don't have a means of getting to where I'm going. Something will happen to that body in your pocket. It will not come back with you. So the best way to carry money, to deal with money, is to have a purpose and a plan for money. And having a purpose and a plan for money is determined by what you want from life. When you save, you have to be disciplined. Disciplined in that you save first before you spend. If you spend first before you save, you will not save, because there will always be something to spend on. If nothing happens to you, your neighbor will be sick. Something will happen to your neighbor. You have done affirmation, you have eaten well, you have taken all our health advice here, you have done everything you're supposed to do, and you're fine. But let your cousin now be sick, and let it be a matter of life and death. Something will still happen that would demand the money that you did not have a plan for. But if you had a plan for it and you have put it somewhere, you will still do your best. But you had a plan. And so you are pursuing your plans with your money, not the plans of other people. The truth is, the person that does not have a plan will have to follow somebody else's plan. Same thing with your life. If you are not planning what you want to do with your life, other people that have planned their lives will use your services to further their own goals, their own dreams. And that's why it's important to set goals. It's important to dream. So why are you saving? What is your saving goal? What do you want from life? And how is the money you are earning going to help you get there? It does not matter what stage of life you're in. These questions are just as important. Because the money you have has the capacity to take you where you want to go. When you look at the amount you have and you see that it's not enough, you automatically know that you must sit down with yourself, do meeting. How do we increase the money that is available? Because where I'm going and where I am, they are still very far. It determines the kind of opportunities you will take. It determines the type of job offers you will accept. Like I always tell people, if you have a job offer and you have seen that the salary inside is 40,000 naira and they are going to have you work from 8 to 6 every day, Saturday and Sunday inclusive, there's no point. The money cannot even take you to the office. You don't accept that kind of job offer. Like 2 weeks ago, 2 girls walked up to me and said they are looking for a job. I said, what kind of job? They said, any kind of job. I said, I don't know what that means. That just shows that they don't have a direction for their life. They said, okay, they can do housework. And I said, okay, what kind of certificates do you have? They said secondary school leaving certificates. Did you do anything else after that? No. Can you work on a computer? At least we have used computers to learn. Many of us learn to use the computer by using the computer. So can you use a computer? No. You have school certs. You can't use computer. Does not require qualification. They said yes. I said, how much do they pay you? They said, well, from 35,000 naira. And I said, okay, this interview has already failed. Because if you get a 35,000 naira job, let's do our maths. The cheapest place that is not on your street, you are going to spend 500 naira on transportation to go, 500 naira to come back. Let's even say that your work has 1 day off, 7 days. And so he's trying to do that 36-year plan of 350 per day. And he's actually trying to make sure it's not even 360. Let's make it like 500 or like, 2007. By the time I got to 2010, I was able to save as much as 50,000 a month from what I was earning. So it would have looked up. The best time to plant an oak tree is 1,000 years ago. The next best time is today. Because the same way, the way I check the mirror again, when I realize I have graduated for more than 20 years. It's me, I say, look at me again. Do I look like I've been out of school for 20 years? I check the mirror again like, auntie, time is going on. Not because I don't feel I look it. I don't even feel it because I have a lot of Gen Zs around me and we're vibing. But I've been working for 20 years. And so if I had been disciplined for 20 years, I'll start later is what made us start late. So don't start later, start now. Because later will come, whether you start now or you start later. When later comes, you will have something to point to that you already have achieved for yourself. But if you are waiting for perfect conditions, you will not get anything done. It is too complicated. Don't worry, we are here to simplify it for you. It does not have to be as complicated as you think. All that table calculation, you don't need to calculate. No need to put table. You just save something and monitor your interest rate. And then you discover that it's simpler than you think, and there is no stress. The entrepreneurs in the room, how much stress do you have to go through to make 20 naira on your 100 naira. You must go to the market. You will now do adverts. You will now make sure you are observing standards. Your savings will make, your 100 naira savings will make 20 naira by just sitting down in that Stanbic account. Or the First Bank, there are many mutual fund providers, or the First Bank Mutual Fund, or the Zenith, all of them, or the UBA. Sitting down, you are not doing anything apart from transferring money to an account that you don't even need energy to do. And you're using the same data you'd have used anyway. And that money is giving birth to more money automatically without stress. You are not looking for customer. You are not checking if the board you pay that side, they can see it. You are not checking whether the food you produced has not expired. You are not checking expiry dates. You are not looking for teachers, because I hear that a lot in Abeokuta. Teachers are scarce. You are not looking for teachers. The land you are trying to sell, the customer is pricing it below cost price. All that does not happen when your money is giving birth to more money. The smartest shortcut, really, is the money market. So how do you start saving now? Before we can start talking about investment, let's get this savings part right. How do you start saving immediately? Open savings account. I'm not saying spending account. The account you spend from should be different from the account you save in. And that's why the bank that gave you an account, you call it current, and gave you 0 COT, because money is entering and going anyhow. But the person that called it a savings account gave you 6% if you can discipline yourself not to withdraw it. So they're even trying to teach you discipline. So have a savings account, meaning money enters and does not come out unless it's going to a place where it will give birth to more money. And then fund the account. I've heard many people say that they're entrepreneurs, their own income pattern is not like, salary earners. The day salary comes in, you can remove your savings immediately. Entrepreneurs, when money enters, don't spend until you do your maths. At the end of the day, do your calculation. How much came in? How much is cost? How much is profit? From your profits, move to savings. From Richest Man in Babylon, it was recommended that you should save at least 10% of everything you make. If you can save more, why not? So if it is that 10% you move the day the money enters, move it. If you can discipline yourself to save a little bit more, like his cost-saving approach, he didn't touch his earnings at all. He just looked at what he had and what he spends on and removed some, then add more to the savings from there. That way, you have created your savings. When it is enough, maybe once a month, you sweep from your savings account to your investment account, where it will build more money. You are doing business, you are making more money without actually exerting yourself. Also, track your money. Many of us have bank apps. Many of the fintech apps have PiggyVest, for example, has the piggy bank. The interest rate is different. As the locking portion, the interest rate is different. Same thing with OPay. I know that OPay, that's why I said OPay is doing investment banking for you, not regular banking. Because even the interest rate shows you that it's not a savings interest. But they still have a wallet. They still have the locking. And all these things have different interest rates. So monitor how much your money is giving birth to. For those who have mutual funds accounts, some of us get emails at least once a week on the percentage and how much is going. Some of us that have app or that use the web app, when you log in, it shows you your money. It shows you how much you have earned per day that month. So you can keep an eye on your eggs. Before, it used to be difficult to know what is happening. Now, one click, log in, you can see, is it growing? Is it reducing? Is it growing at the rate I want it to grow? As a matter of fact, you can put it in different banks. Check which one is growing faster. Okay, this is where my bread is buttered. Move to where it's growing faster. The information is now at your fingertips. You can ask anybody. As a matter of fact, you can ask Google, what is the interest rate on so and so today? And it will bring it out for you. And that's why I said it's not as complicated as we make it seem. I don't know, what's I need in English? On seriousness. Is it on seriousness? See, English does not capture everything. I need to say, look, they are so complicated. Do you understand? You are just not ready to take action. If you are ready to take action, you would realize that it's much simpler than you think. So, what is the money market? Is a financial market where they sell short term. Short term means is usually the lifespan is usually a year. Short term, high quality, meaning that to a large extent your funds are secure. High quality instruments, they are bought and sold in the money market. Examples of this are treasury bills. Treasury bills are sold by the government. Same thing with government bonds. They are sold by the government through the banks to the people. Commercial papers are sold by companies when they need to cure a shortfall in their income. And so they sell commercial papers to borrow money from you and give you back, sometimes at a higher interest rate than the government will do on treasury bills. Fixed deposits, these ones, they are done by commercial banks. However, the amount you will get on your fixed deposit depends on the duration with which you are for which you are leaving the money and the amount of money you are leaving. For example, if you save 100,000, you probably get the same savings interest rate, 6%, but it's fixed. Once you have fixed it, you will get it at the end of that duration. You get your money and the 6% after the duration. Let's say 3 months, 6 months, 9 months, 12 months. It is fixed. It's the amount you have agreed you will get, you will get. But if it was not 100,000 you were saving, if you were saving 1 million, you'll probably get an 8% or a 9%. If you were saving 5 million, the interest goes higher for the same duration. So how fixed deposits work is that the longer you keep the money there, the higher the amount you keep there, the higher the returns you will get. So it's important to sit down with your banker and understand what they're offering you if you're doing a fixed deposit. Mutual funds. Mutual funds is when a financial organization collects money from you and many other people and now goes to invest in all these different things that exist. They will invest in treasury bills, commercial papers. Sometimes they even invest in real estate. They buy stock. It's a mix of investments so that you spread your risk. You know, if you invest in one thing, stock, for example, and it crashes, money will be lost. But if they spread the investment, it's an average of the returns that they will share for everybody. And even the financial institution will make money. It's the remnant of the money that they are even sharing for you that is 20%. So you can just imagine, if I was doing this by myself, maybe I'll make a little bit more, you know. And then exchange traded funds. The difference between mutual funds and exchange traded funds is that exchange traded funds are mutual funds that are even sold on the stock exchange. So even though they have gathered a bouquet of different types of investments and put your money in it, they can actually still sell their own funds on the stock exchange the same way they trade shares. Shares are units of companies. So these are the common instruments and the different qualities or attributes, features that distinguish them. So I mentioned that commercial papers are issued. Don't worry, you will get the slides because I've seen people taking pictures and all. Commercial papers are issued by companies, right? So issuer of a commercial paper is a large credit-worthy company. So before a company can even issue commercial paper, the government would have checked them and ranked them. Are they A, B, or C? Do they have the capacity to repay you if they borrow money from you? You know, if you check online, you would see that there are even some banks in Nigeria, they are rated not likely to fail by the central bank. So it tells you that they are standing well, standing very well. So the same way they rate these companies and qualify them to issue commercial papers. Commercial paper interest rates are usually slightly higher. In Lagos yesterday, Dr. Yusuf was telling us about one that had an interest rate of about 27% per annum, which is obviously higher than what you would get ordinarily on mutual funds that would still invest in commercial papers, but because they spread it, they can't give the higher interest rates. Yes, so maturity days is usually from 30 days to 270 days. 270 days is 9 months, 30 days is 1 month. It spreads over that type period. Risk level is moderate, but you see, there is no collateral backing, meaning that you are not going to sell anything to realize your money. It's been issued to a corporate body. Corporate bodies do fail, even though they have been checked, but things can happen. You know, there's a way to politicize what is going on in a company and make their share prices fall, which would reduce their, so it's moderate risk. There's some risk. It's not government backed. It's not collateral backed. It's not as if they've put something aside that they will use to liquidate whatever money they took from you. So the risk is a little bit higher than generally with investments. The higher the returns, the higher the risk. So the risk is a little bit higher than that of mutual funds and government bills. Now, return types. Either you get your returns as interest, or if you buy a 270 days commercial paper and you have not reached 270 days and somebody wants to buy it from you, you can sell at a discounted rate. The same way you buy pepper and you sell pepper a little bit higher than you bought it. So you can discount the commercial paper. You probably not earn the full amount you were supposed to earn for the entire period, but you will earn something from trading your commercial paper, transferring it to another person. Liquidity means how easily can you get your money? Now, how easily can you get your money? If you have bought a commercial paper for 270 days, you are expected to hold it for 270 days. However, it can be discounted. You can sell it. But is there a ready market for it? The same thing with real estate. If your investment is in real estate and you need money, if you don't see Mr. Olajumoke Opale, you might be with that land for a very long time before it will convert to cash. So liquidity is moderate with commercial papers. Of course, the people that trade commercial papers, because you can't buy directly, accessibility, you can't buy directly. You have to buy either through an investment bank or an investment broker. Now, you will now go and meet the investment bank and the investment broker that this commercial paper, I need the money you put inside urgently. Help me liquidate. Now, that person, until they find a buyer, commercial papers are not traded openly like bonds, and so it's a little bit more difficult to convince, especially because the risk is higher, to convince somebody to take up the responsibility you want to pass. So it might not be so easy to get your money out as you have gotten it in. But our discussion today is telling us that we should not be in a hurry to get our money out, have we? So we should be able to hold to maturity. The next one is treasury bill. Treasury bill, government bonds, they are usually issued by the government. You are the person lending money. The government is borrowing money from you. Because when you buy treasury bills, the government needs money to run the government. That's why they are selling treasury bills to the people. And sometimes it might be that there's too much money in circulation, they want to mop it up, and so they bring out treasury bills so that you people will bring your money to the government and the money will be with the government for that period. Maturity period is usually 91, 182, or 364 days. Risk level, practically no risk. Because unless that government ceases to exist, they can't owe you. So you will definitely get your money back. Sometimes you will even get your interest up front. So if you are doing 91 days, on the day that, let's say you want to invest 100,000, if it's at 18% per annum, they will take 100,000 less the 18%. So you get the 18% immediately. At maturity, you get your entire 100,000. That's how it works. So most times, interest is paid upfront. However, you can either redeem your full value at the end of the period, or you can, like I explained for commercial papers, you can sell before maturity because you need that money and you're no longer interested, you just want to get out. So that's how you can do your returns. That's how your returns can come. Liquidity is high. People are trading, as a matter of fact, they bid for bonds. So there are times when it has finished before people are even done bidding. So there are a lot of people looking for bonds. You can easily liquidate if you have treasury bills or government bonds. But it's usually bought through banks, CBN, auctions, and brokers. You cannot walk up and buy yourself. It's not traded like everything else. You cannot enroll for it by yourself. You have to go through somebody to get treasury bills. Fixed deposits is done by commercial banks and other financial institutions. You can do it directly. You can come in and say, I want to fix this amount of money. It's the same thing the fintech apps called locking money. Yeah. So, but their own, when you lock with some fintech apps, they can pay you your interest upfront. When you have a fixed deposit, you get your interest and your principal at the end of the period, not upfront. So you get everything at the end of the period. It comes from 30 days to 1 year. And the interest rate varies depending on the duration and the amount. When I tried to get a table, the table was so long, so complex. That's why I didn't put it into the schedule. Now, risk level is low, depending on the bank. You know, there are some banks that they are standing on one leg. You know, they will say they are fine, but you see, when you keep hearing news, they will send you BC. If you have money in this bank, go and collect it. You already automatically know that even if they are not going to collapse, something must be happening for people to be afraid like that. It might be that their debt ratio, the debt and reserve ratio is somehow. It might be that the government is already looking into their books to be sure they are healthy. By the time they are coming to check if you are healthy, that means it's not obvious you are healthy. We need to check to know. At that time, your money might be at risk because even if they can give you back your capital, they might not be able to pay the interest they have promised. So it depends on the stability of the financial institution. But please rest assured, all banks in Nigeria now have reserves. They must put money with CBN. They must be insured and reinsured. So before your money will miss, it will try. And then you would have heard something. You know, so that's why it becomes important for us to begin to pay attention to information about where our money is placed. Yes. So the interest rate is fixed. It does not fluctuate. It's what they promised you at the beginning of a fixed deposit that you will get at the end. Liquidity is low. If you have entered fixed deposits for 90 days, 90 days will complete before you will get your money. If you insist that you want your money, there will be a penalty attached. You know, I know that on PiggyVest, if you lock and you want to withdraw before date, there is a penalty. You lose about 3% of your capital. Yes, so you are going to lose part of your capital. You might lose the entire interest depending on when you want to terminate. Either it's close to the end or close to the beginning. You might lose your entire interest and a portion of your capital for early withdrawal. Accessibility, you open it directly with a bank. Once you have credited them, they can create a fixed deposit in a matter of 5 minutes. So it's not something that is difficult to create. But you can walk into any bank and say you want a fixed deposit and you'll be able to do it in less than 15 minutes. Now, mutual funds, we preach mutual funds at the 110 Academy regularly. It's managed and regulated by the Security Exchange Commission. Mutual funds are not issued. Like I said, mutual funds is everybody bring your money together and I go and invest in all these other things we have stated. And there are some things that are not even here that they invest in, like stock markets, real estate, anything that will bring good money. I'm sure you know that if you invest in business, you get higher returns than if you go and do this financial investment. It's just that business has higher risk. So what the mutual fund does is it pulls the money and then spreads it over the different types of investments and pays you the average of the return on investments on all the things that you do. The end is open. Once you subscribe to mutual funds, you can keep it forever. You can decide you are not doing again, and that's the end. You can decide you will do forever, and that's it. So there's no tenure for mutual funds. The risk level is low to moderate. Now, there are different types. There are real estate mutual funds that are dedicated to real estate that will tell you that what they're investing in is real estate. Of course, if you ask questions, they will tell you what it is in. But there are some that are money market, some that are dollar-based mutual funds. You know, there are different types. There are commodities market mutual funds, depending on the type of mutual funds you are going into. Now, if it is in a volatile area, then it will be volatile. Do you understand? The risk will be higher if what they are investing in is riskier than the spread. But they will give you a fact sheet showing you how they have spread the investments. And if you want to take care to read the blueprint, you will agree to one that you are more comfortable with. Sometimes the returns, the interest is daily. As a matter of fact, you can tell them that they should pay you your interest every month or reinvest your interest. Now, you cannot tap into the power of compound interest if you don't reinvest your interest. What it means is that when you make interest, when you get an interest on whatever you have invested, if you say they should pay it to you, your capital is not going to increase. So if, for example, at 20%, you are earning 100,000 makes it easy for me to calculate. That's why I keep using 100,000 as the example. If you use 1 million too, you just add 0. That's easier for me. But by the time you try to divide 2 and 3, it's getting technical. So let's use 1 million. So if you have 1 million naira and it's at 20%, you will get 200,000 at the end of that year. If they give you your 200,000 and you go and spend it, what do you have? 1 million. So the next year, you will still get 200,000. But if you leave the 200,000 and say they should reinvest it, your investment for the following year will not be 1 million, it will be 1.2 million. Your 20% will now become, it has become, sir? Yeah, you shall see that your interest changes, your capital changes, and it continues to change like that. You make more money by reinvesting your interest than taking it out. And that's why we always also here preach compound interest, leaving the money to grow. Liquidity for mutual funds is very high. You can wake up today and say you are not doing it again, and that's it. Worst case scenario, they ask you for 24 hours if it is a work day. If it is not a work day, they ask for 24 hours after work has resumed to credit your account. That's the maximum. It's extremely liquid. You can decide this morning, and that's it. They give you your money back immediately. How do you access it? Through fund managers and fintech apps. So there's Stanbic IBTC fund managers. There's First Quest. That's the name that First Bank uses. Everybody has a fund manager arm for their banks, the banks that do it. They have a fund management arm. They don't manage it with the bank institution itself. It has a fund manager attached to the bank that manages the mutual funds. Fintech apps, you just open your app and you see there. As a matter of fact, there are times when I'm sleeping in my house and I get a mail from Piggyvest saying, these investments are open. This one is 12%, this one is 18%, this one is 25%, depending. And they send you a mail listing the different things you can invest in. If you ask, they will send you a sheet with different categories of mutual funds that you can put your money into. So how does it work? With the money markets, these instruments, you are the lender. The person that issued the instruments is the borrower. So if it's the government that is borrowing money from you. If it's a commercial paper, it's a company that is borrowing money from you. If it's a financial institution like those mutual fund administrators, they are the ones borrowing the money from you to use to trade and pay you a return on your money. However, to choose, you consider what the interest rate is. Are you getting enough returns on your money? And that's why I said you can do two. Check the rate at which your money is growing, but stay with the one that is able to grow your funds faster. Also, another thing you need to consider is access to funds. You know, the table we studied shows the level of risk to your money. And it also shows how easily you can get your money out when you need it. Because if you have now met with that opportunity you were waiting for, and you now go and say you want your money back, and like fixed deposit, they say, with that year, we have signed 180 days, you cannot collect money till 180 days. That opportunity will be missed. You know, so in considering what to put your money in, you must also consider how easy it will be for you to access funds when those opportunities come. If you are affirming it and believing it and it's on your vision board, the opportunities will come and you have to be prepared for it. Of course, you must consider compounding. Now, how is compounding relevant? There are some mutual funds that compound daily. There are some that compound monthly. There are some that compound quarterly. There are some that compound annually. The more frequent the compounding, the faster your money grows. So that example I shared, that at the end of the year, you get 200,000. That means that you cannot add that 200,000 to your capital until the next year. But if they pay you your interest on a quarterly basis, that means that from the second quarter, your capital would have increased, not annually. You understand what I'm saying? So it makes your money grow faster if it compounds shorter, in a shorter period than annually. And so you must pay attention to how often it compounds as well. And that's why I like my own mutual funds, because it shows me how much I've earned on a daily basis. And I see when it rolls it over at the end of the month and adds that interest to my capital, and I start earning on the interest I earned last month. So, how do you leverage? When you save and you invest in the money market, which is trading, you get financial leverage. So you build your capital by saving. You know, we started this conversation with savings, and we said you have to make sure you save regularly, periodically, as often as weekly, daily, monthly, if you earn on a monthly basis. But if you earn on a daily basis, you save daily. If you earn on a weekly basis, you save weekly. And when you save like that, you use that to grow your capital. Your capital continues to increase. So this conversation of 1 million is not a conversation of 1 million if the following month you add another million to it. So automatically, the 1 million becomes 2 within the space of 1 month. You understand? So you will be growing your capital. The higher your capital, the higher your interest. And so the money you have grows faster. So having a savings culture this year and not having next year is not going to help your savings grow. Saving this month and skipping saving next month is not going to help your savings grow. The best way to grow your financial clout, your financial muscle, is to save consistently and invest consistently. So you build your capital with your savings and you grow your money with smart, low-risk investments. So always remember the level of risk of losing your money, and always remember the level of accessibility, which is how you take advantage of opportunities. So how do you trade in the money market? Like I already said, it means investing regularly and strategically to maximize your returns. Use trusted platforms, commercial banks, fintechs that you know. Add money to it regularly. Let them compound your interest. Don't collect your interest. You know, we've had this conversation around how Dr. Abi Bolamitoye built his wealth, his the first hospital, then the second hospital. The second hospital came from him saving a quarter of his earnings for 7 years without touching it. That was how he gave birth to another hospital. By the time he had the second hospital and he saved for another 7 years, now know that there are 2 organizations saving for 7 years. That's double the effect he had before. Banks started approaching him and offering him interest rates for his fixed deposits. We have heard this story over and over again, and it's in one of those books, I think, What I Want My Child to Know About Money, on the table there. You know, so it just shows you that you don't even need to look for money. Money markets will come and look for you when the volume of money you are able to amass from this discipline grows. So choose an instrument based on your savings goals and risk tolerance. Some of us like a little bit higher interest, so we don't mind commercial papers. Knowing fully well that commercial papers are from companies that one person in their board can decide to sabotage. You understand? But you know, a little bit of risk. And that's why we say spread it. Don't put all your eggs in one basket. So if you are going to go for something with higher risk, don't put all your money in the high risk investments. Put some, put small. Dr. Yusuf's example yesterday, he said he put 10% of what he had saved in the higher risk and maintained. And as a matter of fact, as soon as they paid the interest, he did not reinvest. He carried his interest and capital and went back to drink water on it. You know, if it's your sweat and blood, you are not in a hurry to lose it. So you drink water on it, you watch the market. It's the same way when you want to cross the road. You look left, you look right, you look and then you proceed. So watch out for your risk. Some people will not be able to sleep if their money is in a risky place. Don't risk your health for it. If you don't have the capacity to do high risk investments, stay with what you know and watch your money grow. So this is the table I promised you that is even more fantastic than the table of 360 that we are talking about. This is somebody saving 100,000 naira per month in a place where they can get 18% per annum over the space of 10 years. So if you save 100,000 naira per month, in 12 months you will have 1.2 million, Abi. So in the first month, you will earn at 18% per annum, you will earn 117. By the end of the first year, you will have 1.3 million, not 1.2. By the end of the second year, you would have 2.8 million, not 2.4, which is what you saved. By the end of the third year, you would have 4.7, not 3.6, which is what you saved. Like we said, the reason why we know Dr. Abi Bolamitoye does this 7-year thing is because after 7 years, magic begins to happen. So after the 7th year, let's look at the 8th year. The total amount that you have saved over the space of 9 years, after the space of 8 years, is 9.6 million. The amount you have earned as interest is 10.5. So in the 8th year, your interest would exceed your capital. If you don't touch your interest, if you have collected part of the interest, it cannot be. But if you leave it in the 8th year, your interest will do what? It will jump over your capital. And this is saving 100,000 per month. We are not saying save 1 million. No. Saving 100,000 per month, at the end of the 8th year, you have 20 million, even though you only saved 9. At the end of the 10th year, you would have 30 million, even though you only saved how much? 12. That means that the interest has swallowed your savings. So this is what it looks like. 61.2% is interest. 38.7% is the deposit. This is after 10 years at 18% per annum. And we have already discussed that mutual funds this year has not been less than 20. So that means that it will even grow faster and better than this. So, like he said, what if you now do it for 30 years? Oh, you did not see Mr. Opale's face when he saw the balance of 30 years. His eyes, you know when they say Ojushado, his eyes opened wide like, what? At the end of 30 years, you would have 1,041,678,504 naira 57 kobo at 18% per annum. Do you understand? Saving 100,000 every month over the space of 30 years, you would exceed 1 billion. But guess what? How much would you have saved? 36 million. Your savings will be 36 million. Your interest will be 1 billion. As in, your interest is over 1 billion. While your savings is 36 million. He's doing you like that, Abi. So you understand what happened to him last month that made him go to open savings account. So is it happening to you right now? Do we need to say anything? Does it not speak for itself? The amount you save is red. The interest they are paid you is grey. Are you still going to go and collect your savings? You better leave your savings there and let it be any interest and be reinvesting the interest, because it just shows you that. Now, he said that he calculated his age, added 30, and I will still be available to spend this money. Do you understand? Yeah. And that's why I'm glad your children are here, sir. So that they can start today. Adding 30, they will still be fine. Would they be as old as you if they had 30? And you're still spending your money? Your interest will be in excess of 1 billion. And you see, when people say inflation and no money, they are not made to. You are better safe so that you have some. Than say that inflation will ridicule your money. What will I be able to achieve with 1 billion? Having 1 billion is still not the mate of not having money. It's not the mate of having 5 million. You don't understand. It's not the mate of having 500,000. So it's 500 million. It's not. So I would rather have than say that the inflation rate is 23.2%. I would rather have. I'd rather be in a place when I have something to fall on than be naked, and because that's what happens to you when you do not have money. You are naked and exposed. Because life can just do anything to you. Your choices have been taken away from you. It's what they throw at you, you would accept. So are we going to give this thing a try? When we started, I mentioned emergency funds. If you put your emergency funds and you say you will not touch it, you will touch it. So have small emergency funds. And there are different categories of emergency funds. There's emergency funds of I must not go hungry. That you just have one small change somewhere that if things are looking somehow, at least I will eat. There are emergency funds of I've now reached a stage in life where people are depending on me. The house must not collapse, emergency funds. So whatever happens, women know how to do this one a lot. Whatever happens, we will have ilasepo and eba to keep going. Why is emergency funds important? If you don't have emergency funds, you will touch your savings. Because things will happen. If you don't have one small money that you are saving, not this one that you are putting apart not to touch. If you don't have a money that you are keeping apart for something can happen money, you will touch the savings you are not supposed to touch. So always have one small something somewhere for if something happens. For if your tire goes flat on the road. For if the freezer you are using for your business refuses to come on and you need to call somebody to check it. It might not be much. It might be as little as 3 months living expenses. When I say 3 months living expenses, we started by saying, know how much you even need to survive. If you have it and you have to use it, once you use it, put it back. So that if anything happens again, you still have something you can use. But don't now go and lock it in fixed deposits, where when emergency happens, you cannot access it. You now go to mutual fund that they will give you in 24 hours and say you will replace it. Usually, we don't replace it. And then if you replace it, the interest that you have been building, that you are supposed to build over, you have cut it halfway. And so your maths will not math again. Your calculation will not calculate. Another thing is, because you have now seen this timetable, you want to get there in 15 years. You are now looking for 40% interest. The higher the risk, the higher the returns. If you get 40% interest, it also means that somebody somewhere can snap their fingers and your money will go missing. So don't CBEX. Tell your neighbor, don't do CBEX. If it is too good to be true, if it sounds too good to be true, it's most likely too good to be true. So check round. The minute you see that all the investment platforms you are seeing, they are offering 20% per annum, they are offering 25% per annum, and you now see somebody that is offering you 20% per month, you already know that it is, unless it's money you don't mind throwing away, don't put it there. And if it is money you don't mind throwing away and you put it there and you get returns, you are happy. If it gets lost, you will not kill yourself because it was money you could throw away in the first place. But don't chase unrealistic returns. Usually, it swallows your capital. Another thing is, don't go to sleep. I've said that they will send you weekly mails. Read the mail. For me, I like the fact that the mails I get, they highlight the interest rates. So I'm not reading the whole thing. I'm just going straight to the interest rates. Hey, you understand? What do chickens do? They sit on their egg when they put it in a nest. So sit on your egg, watch your investments. Don't go to sleep. Understand, when they mention the name of the bank where your money is, let your mind come alive. I have something there. What's going on? You understand? Pay attention to where the treasure of a man is. Put your heart, some people have disconnected their heart. Put your heart there. Watch over your treasure. Because if you don't watch it, the people that are watching, they will be making progress and you won't. And you'll be wondering what happened. They will just tell you that other bank was offering a better rate and we moved while you were sleeping. So don't sleep. Actively grow your money. So what have we now been saying since? To open fintech app, as long as your NIN is available and your BVN is available, you can open that savings account now. If you don't have, bring out your phone, open savings account. Is that serious? Because maybe I now found out that I've worked for 20 years, Abby. You know that I'm 1/3 of the way through that 30-year thing. I feel like going back to check what my interest would have been by now if I had started then. But then start now. It's never too late to start now. But the best time to start is now. Now, opening fintech apps, you don't even need, they will open first and then you transfer to the account. So you can open even without money. Even mutual funds, you can open and then they will send you instructions on how to fund. So you can actually open it in anticipation of money to fund. And if you have been writing savings affirmations, money will come. What usually happens, we don't track how the money goes, but money comes. That's why I always I don't look at account balance, I look at transaction. You know, when you look at your transaction summary, you'll be angry with your bank because you ask the bank, that's Ebola, it's roll way down. Do you understand? Because your transaction summary always shows all the money that passed through your account. And then you discover that money passed. I was the one that did not trap it. And then it teaches you to be a better steward. Trap it. You must be able to explain where money went. So that's why I like looking at that transaction summary. I check that transaction summary, not the account balance. I check the transaction summary. If I can explain where that money is, then I'm a good steward. If I am thinking, are you sure? Did I see this much money? That means I didn't know. I was sleeping when money was passing through. It helps you stay accountable to know how much passes through and then save something. Right after the savings account, open a mutual funds account. It's only a link. You don't need to leave this room to open a mutual fund account. You don't need to go to any bank. You sit in your chair, go to their site, you open the account. You have your NIN, you have your BVN. You can do practically anything in Nigeria today. So open a mutual funds account. Put money there and then keep putting money there. Your bank will, you can call your account officer. People say they don't know their account officer. Do you have a banking app? Open your banking app. The information, phone number and full name of your account officer is on your banking app. But we people, we just go there to transfer. All those other information, we don't read it. Name and phone number of your account officer is in your banking app. I'm not saying fintech account, OPay doesn't have staff, so there's nobody they have assigned, but they have a customer care line that will attend to you. But there's nobody they have assigned to manage you. All commercial banks have assigned somebody to manage you. The person's name is in your app. So call the person. Please, on the 30th of every month, move 5,000 naira from my account to this account, and they will set up a direct debit instruction. And money would automatically flow from your account to your mutual funds account. You don't need to say anything, especially salary earners. You know the day your salary will come in. Just give them an instruction that the following day, they should move your money from your account, and then you don't have to think about it. And when you have done it, that one that something happened, the tree fell on the Iroko now fell in the gutter, the bank will not hear that story again. You have told them to move it on a particular day. So unless you go there to change that instruction, they will move it. And so automatically, whether you are involved in the process or not, your 30 years will start counting. Automatically is a very good way to keep your savings safe from you. So do it now. I'm saying do it now. Nobody's bringing out their phone and pressing account opening. So do we have any questions? Do we have any questions? There's a question here. Right here. 2 questions, 3 questions. Okay.
Thank you very much.
Yes, ma.
My question goes thus, based on the last thing you said, calling the account officer to move a particular amount of money to a separate account. I remembered that there was a time doctor gave us something like that we can have a standing order.
Yes.
So I want to ask, is there any difference between that standing order and the mutual fund you made mention of now?
The mutual fund is the account they will credit with the standing order. The standing order is an instruction to the bank saying, move this money from my account to that space is blank. That separate account is the mutual fund. Do you understand?
All right, thank you, ma'am.
So it's either a standing order or a direct debit instruction. Those are the terms they use in the bank to describe that type of instruction, saying on so and so day of the month, move my money from my own account to that destination should be the mutual funds account.
Okay, thank you very much.
Yes. The next person to you.
Thank you very much, ma'am.
Yes.
This is my question. For instance, now, if I'm using a particular bank, and maybe because you've asked us to check the interest of each bank that we want to use as a mutual fund, if my own account, my bank that I'm using, I look at it that their percentage, or I'm not that sure about them, and I want to open, for instance, at Stanbic now. I don't have account in Stanbic. How am I going to do it? I will just open and be crediting them like myself, or transfer from my account to that account? Or must I have an account with with Stanbic Bank before I can give that order?
Thank you very much, ma'am. You don't need to have a bank account to have a fund management account and investment account. So you can open a mutual fund account. Do you understand? The only account you are opening, you're not opening a traditional bank account. You're opening a mutual fund account. It will have an account number that you will use when you want to put money in your mutual funds. So there's a way you will now fund from the normal bank you use. You will fund that mutual fund account on a particular time of the month. That's why we are talking about standing order or a direct debit instruction. And if your income pattern is not fixed, it's easy for salary earners to know that on a particular day there will be so and so amount. That means that you will have to take the responsibility upon yourself of transferring that money when you have it. But you would have the account details. Once you open your mutual fund account, they'll give you the details of how to fund that account. Yes. So they'll give you an account number, bank, everything that you use to fund your mutual fund account.
Thank you very much, ma.
Yes, sir.
Really enjoy your teaching. The question is, how do I know the one that I give interest on daily? Maybe you can advise us so that it can lessen our search. That's number one. Number two, some of us are not collecting salary every day. But can we just give instruction that any money that comes to this particular account, so percentage should be deducted and sent to mutual account?
Yes. Let me start from the last question. You can give an instruction that they should move a percentage of the money that comes into the account, but you will specify the period. Do you understand? You tell them the time they should. It's not that, is it every inflow that they take a percent? You will, if it is possible for a particular account that for every inflow they should remove, that will be your instruction. But you have that discussion is between you and your bankers. You want to know the daily, there's one that I am familiar with. I will share it with you. And you see your interest on a daily basis. Yes. Yes, sir.
Thank you very much, ma'am.
You're welcome, sir.
Yeah. The analysis and presentation really gave me a lot of information, very valuable. And I saw that from that analysis, to get to ₦1 billion just by 100,000 a month, I realized that if somebody wants to make it a lot easier, you can break it down to a daily saving goal. So I did an analysis. I saw that 3,000 plus will get me to 100,000 in the month. What if I'm able to do about 10,000 naira a day?
You reduce the time.
It wouldn't take me 30 years,
No,
just 10
it
years.
won't.
Then, please, I want to ask that, is there any financial institution that gives the highest interest rate? One. Secondly, the compounding. Can we get those that do the daily compounding?
That's what he asked, and I said I will share it.
Okay,
But interest rates, I cannot shop for you. You will shop by yourself. So check. Do you understand? Check. You might even come across more institutions than I know about. So keep checking. All of us have to be financially savvy. We must know where we will check for interest rates. Yes, sir.
Thank you very much for the lecture. I just want to clarify something.
When you were showing us the table, I saw an interest of, is it 18% on monthly basis?
It's annually.
Okay, is it annually?
Yes.
Okay, the savings is
18% per annum.
per annum. Yes, I understand.
Yes.
But what I thought I saw was monthly. The savings is monthly, but the interest is
annum.
annually.
Yes.
Okay, and yet we still arrive at that amount.
Yes, yes.
All right, thank you very much.
That's why you saw that the table had year 1, year 2. If it was compounding monthly, it would be month 1, month 2, month 3 to show the increase. So it was compounding annually, not monthly. And like I said, the mutual funds I will share compounds, well, it shows you daily, compounds monthly. So it also means you get there faster than annually. And it's a higher rate, it's about 20 point something, it's higher than 18%. Yes.
An information that I have, if you want to save for children on their mutual fund, earlier, if you don't bear the same name with that child, you cannot use their C number, C dash something. Now, the bank, when I called the bank, the accountant last week, she said everyone has been given fresh numbers.
Exactly. You got an email with an account number you will use to fund your account, and
anybody can fund anybody's account now.
So please, as you are opening for yourself, sir, open mutual fund for your daughter.
Yes, my two.
Yes. I also got that email with my new dedicated account number. As a matter of fact, money that I am not expecting. If somebody says, you've been a good guy, I want to dash you money, that's the account number I'll send to them. So that I will not, if it passes through my hand, that's when I will not remember one shoe. Don't let it even pass, let it go straight there. So there's some money that is not in my budget, unexpected money. Let it go straight to mutual funds. Because now it has its own account number that is dedicated to me, and I don't need to route it through anybody or any bank. Yes, sir.
I think my question is in relation to, is it static that it should be monthly payment into the account?
No, you
Once
can pay
you have
every
any
day.
money, you can,
Yes.
and they will be able to show credit.
You will see it. The minute you increase your savings, it will show. The minute your interest increases, there's a column for how much you have put in. There's a column for how much you have paid. There's a column for the interest you have accrued as at today this month, and it increases every day. There's an app where you can view your balance. Yes, sir. So have we all started opening accounts? There are 2 other questions at the other side.
I just want to ask that can we open mutual fund for our business?
Corporate?
Yes.
Yes.
Okay.
Yes, you can.
Okay. Thank you.
It's an entity, it's an individual. It has corporate entity. But it has to be registered though. Otherwise, you have to open it in your own name. As a matter of fact, if it's a business name, you will most likely have to open it in your own name, trading in the name and style of. That's how they would say it, yes. Your question has been answered? He has a question.
Okay, my question is, I think he's wanting to invest, but wanting to invest, but how do we deal with psychology that comes with investing? That's my question.
That is a seminar session. Now, knowing what psychological issues you have with investing is what determines how you will deal with it. And that's why I say it's a seminar topic on its own, because that means that we want to identify the different types of psychological issues you can have in relation to investing, and then tell you what you can do about it. That is a course on its own. But let's quickly touch on maybe 1 or 2. The first one, the fear of missing out. That is what prompted people to invest in CBEX. They came to you with a Ponzi scheme and told you they will give you 30% interest every month. And then you said, you are not interested, you don't want. But you see, you saw your neighbor who invested buying a car. You saw the other person who invested declaring and doing birthday and doing things you have not been able to do because you don't have enough money. And then you suddenly begin to feel like, am I not missing out on the good things of life by not getting into this Ponzi? I know that there are some people, it's the day they put their money, that thing will crash. So the fear of missing out has now become your motivation for joining the bandwagon, and then you get into trouble because you did not come from a calculated perspective of analyzing your risk and returns and how much you put in. You jumped into it from fear. Now that is fear of missing out. There's another one. That is fear. You know, you said psychology. Psychology is about your human interaction with the facts that you have. Another one is that somebody has now done CBEX in this room, and the person has heard us talking about mutual funds, and the person is saying, I bet Batamilo man. Why? Because he has been burnt before. Anybody that has if you have a baby that put the hand in a candle and was burnt, put bulb, you will not touch it because it is glowing and it is red. So the fear of your past trauma is also capable of stopping you from investing because you have been burnt before. So unless they give you insurance, and you know they have to whine you before you drop your money the next time. That's another effect of psychology. Now, there are even influences that are inherited. You have seen your parents behave and relate with money in a certain way. And so you also begin to automatically relate with money in that way. Now, growing up, I know that my father is the one that informed a lot of my decisions in life. And my father is actually technically what you will call a buje budano. So when there's money, the neighbors will know. Do you understand? And when there's no money, unfortunately, the neighbors will not know because they will still be driving the car he bought when there was money. But you see, he had somebody in our house that when there's money, the last, any money on my mother's hand is the last. So the child that came, 5,000. But you see, 7 children will come, and that 5,000 will still be the last. Check was it be 35. Do you understand what I'm saying? Now, watching the two of them relate, I had to, as a child, decide exactly how I want to pattern my financial life because there are two extremes. Somebody goes from very many to very little. My mother was a civil servant all her life, and so she never had a lot, but she always had the last. Now, somehow, I find myself having the last. Let every evil fall. There's still one cupboard paper that has one money. There's still one piggy vest we have forgotten. There's still one cowrie wise that I can't remember when I opened. It is inherited. Because I just found out that my mother's style of managing finances made sure we were never stranded. And I had, because of my father's high and low, I now have a fear of being stranded. So now, if there's any opportunity that requires me pushing my weight behind it, I won't. Because there must always be the last. So I will never pack everything and put anywhere. It is a learned behavior. It is also the psychology of money. Some people grew up hearing that money do not grow on trees. And so they already expect hardship to be able to earn. And so if you tell them that they will make 20% sitting down not doing anything, they can't believe you. Why? Because in their mind, the psychology of money that they have embraced says that there must be some level of difficulty associated with earning. So psychology of money is a seminar topic. I have only shared 3 or 4 perspectives, and you see how deep, and I'm sure that everybody is just thinking, that's how my daddy used to do, that's how my money used to do. Me too, I'm afraid of, and the things we're afraid of are so different. And it is dependent on our experiences and also the things we've seen. Other people's experiences in our lives, our own experiences, the things we were taught, the things we were told. So psychology of money is not an exhaustible topic. As a matter of fact, if you have psychological issues with money, just see a money therapist that will help you get to the root of the issue. Because as many people as there are, is the combination of fears that will be inhibiting with the way they relate to money. And that's why you hear some people talking about money blocks. There's some people that relate in a certain way because of their psychological constitution. So that's why you will keep hearing us say, spend time with yourself, know yourself, understand the things influencing you to behave the way you do, especially with money. I know that playing money games also brings these things to light. When you play Monopoly, If you are afraid of spending money, it will show. Everybody in the game will buy property. You'll be keeping your money. If you are also afraid of missing out, you will buy property and then become illiquid. You will not have money. So your money personality will come out when you play things like cash flow game, Monopoly. So if you want to discover your psychology, you can do it by yourself without talking to a therapist. Play Monopoly and analyze your strategy during the game, after the game. It gives you an insight into the kind of person you are around money. That was a very intense question.